Your bank account doesn't care about your talent, it only cares about your leverage. And Selena Gomez just proved that being a global superstar is actually the least profitable part of her portfolio. Most people look at a chart-topping artist and see record deals or movie contracts, but the real story of the Gomez empire is a masterclass in American capital allocation and the ruthless transition from employee to owner. You are watching a shift in the wealth paradigm where fame is no longer the end game, but merely the top of the marketing funnel for a multi-billion-dollar enterprise. To truly understand how she built this, you have to look past the red carpets and into the strategic diversification that has made her one of the youngest self-made wealthy women in the United States today. The American dream often talks about working hard, but in the high-stakes world of U.S. finance, we talk about scaling, and that is exactly where Money Facts USA sees the genius in her move into the beauty industry. When Selena launched Rare Beauty, she didn't just slap her name on a bottle like the celebrity fragrances of the early 2000s. She tapped into a fundamental shift in U.S. consumer behavior. She identified a massive gap in the market for inclusivity and mental health advocacy, turning a makeup brand into a mission-driven powerhouse that resonates with the social consciousness of Gen Z and millennial spenders. By retaining a massive ownership stake while leveraging professional retail partnerships like Sephora, she secured a valuation that dwarfs her lifetime earnings from the music industry. You have to realize that the music business is notoriously stacked against the artist, with predatory master recordings and grueling tour schedules that offer low margins after expenses. Gomez recognized early on that while a hit single provides a temporary cash injection, equity in a consumer goods company provides generational wealth and a high multiple exit strategy. This is a lesson for every American investor listening right now. Your earned income from your 9 to 5 is your seed money, but your equity is your freedom. Here at Money Facts USA, we analyze these moves because they represent the pinnacle of modern asset management, where an individual becomes a conglomerate by controlling their own distribution. Beyond the beauty industry, the empire extends into the massive U.S. real estate market and tech venture capital, showing a level of sophistication usually reserved for Wall Street veterans. From her high-value property flips in California to her investments in mental health platforms like Wondermind, she is diversifying across sectors that are historically resilient to inflation. Wondermind is particularly interesting from a financial perspective because it targets the rapidly growing wellness economy, which is currently valued at trillions of dollars. She isn't just spending her money, she is deploying capital into scalable ecosystems that operate 24/7 without her having to be on a stage or a movie set. This level of financial discipline is what separates the flash-in-the-pan celebrities from the long-term titans of industry that we track at Money Facts USA. You are seeing the blueprint for the new American mogul, one who understands that your personal brand is your most valuable intangible asset, and how you monetize that asset determines your place in the economic hierarchy. By focusing on high-margin businesses and maintaining a clean public image that attracts top-tier corporate partners, she has built a fortress of liquidity. It is a reminder that in the United States, the greatest wealth isn't found in the spotlight, but in the boardroom where the ownership papers are signed.